So without wasting time, let's start. So in our first subtopic, we are going to look at the definition. Accounting is a language of business, or we can also talk about is a service activity that is all about recording, classifying, summarizing accountable events in order to communicate quantitative, qualitative, and financial economic information to different users in order to make relevant decisions. Then we have also the phases of accounting process. So they involve recording phase, which involves the routine and mechanical process of writing business transactions and events in the books of accounts, or the books of original entry, or simply the journals, in a chronological order in accordance with entities and other established accounting rules and procedure. Another phase is classifying phase, which involves sorting and grouping of similar transactions into their respective classes by posting them into a ledger. Then you also have summarizing phase, which involves the preparation of financial statements or reports. It is usually done periodically, either monthly or annually. Then we have interpretation, which refers to the analysis of the accounting information. So these are the four phases of accounting process: recording phase, classifying phase, summarizing phase, interpretation phase. In the branches of accounting, you have various branches such as financial accounting, tax accounting, cost accounting, managerial accounting, and also auditing. Then, what are the objectives of accounting? The moment that we are learning accounting, so what are these objectives that we need to understand? We can talk about systematic recording of transactions. This is basic objective of accounting, is to systematically record the financial aspect of business transaction, that is bookkeeping. Then the second one is ascertainment of results of the above recorded transactions. It has to ascertain the results. Then the third, it is the ascertainment of the financial position of the business. So that is also another objective. The fourth, it is providing information to the users for rational decision making. And finally, to know the solvent position of the business. So those are the 5 objectives of learning the accounting. And who are these users of accounting information and their needs? We have an acronym referred to as guest groups. So we can start with the government. Especially the government needs accounting information during its day-to-day operations, so that to assess the amount of tax to be paid by the business or an individual. Then you have the employees. Employees, if you're working in an accounting, finance, or trade department, the accounting information becomes essential. Then you have suppliers and other trade creditors, those who are providing merchandise to different business establishments, such as Coca-Cola or Pepsi. They need to understand the business well. Then you have the customers and the consumers. They also have to have the information in order to determine the continuity of the business. Then you have the readers. It's similar as the similar need as suppliers They are interested in accounting information to enable them to determine the ability of the client to pay their obligation and the interest attached when the loans becomes due. Then you have the investors in order to make relevant decisions. Then you have the public. All of us need accounting information to know the status of the business. Then you also have the management. They need accounting information to assist for planning and decision making. So those are the most users of accounting information. Then what are these qualities of useful accounting informations? The qualities that we all need to understand. Then we have accounting information has to be relevant. It is necessary for predictive and feedback value. It has to be relevant. Then it also have to be timeliness. The quality subsets of relevance. It has to be presented in a timely manner. Then it has to be reliable or reliability. If accounting information is not reliable, it cannot be used to make quality business decision. Then it has to be consistency. This will help in useful decision making. Thus, it has to be recorded consistently, meaning the same accounting treatment or given type of accounting data. Then it has to be comparability. This absence of consistency. If you cannot compare accounting information for one period of time to another, then you cannot derive useful information in order to make operational decisions. And what are the limitations of accounting information? We can talk about historical. Accounting information is prepared based from past period monetary transactions. So it will be highly feasible that what happened in the past will hold on in the future, and so the accounting information may be considered irrelevant on that basis alone. Also, too quantitative rather than qualitative. Accounting information is too many figures and less of explanations. For any system to be useful, it must strike a balance between quantitative and qualitative measures. More so, it is only comparable to similar business. So accounting information make it only comparable to business of similar nature. It is difficult to compare a service-oriented organization to a manufacturing-based firm. Then let's discuss about professional ethics. We study the integrity. A professional accountant should be straightforward and honest in all professional business relationship. Objectivity. He should not allow bias, conflict of interest, or undue influence of others to override professional business judgment. Then he should practice professional competence and due care. A professional accountant has a continuing duty to maintain professional knowledge and skill at the level required to ensure that a client or employer receive competent professional service based on current developments in practice, legislation, and techniques. Then he should practice confidentiality. He should respect the confidentiality of information acquired as a result of professional and business relationship, and he should not disclose any such information to third parties without proper and specific authority unless there is a legal or professional right or duty to disclose. Then he should also practice professional behavior. He should comply with the relevant laws and regulations and should avoid any action that discredits the profession. Then, what are the basic accounting equations? The basic accounting equation involves assets, which is equal to liability plus equity, or the capital. Assets is a resource that is owned or controlled by the company to be used for future benefits. Then, on the other hand, a liability is an amount of money owed to another person or organization. Equity will represent the portion of a company asset that shareholders or partners own. So let's look at the basic double entry rules for accounts. You have the accounts, what to record and entry in the account. So for an asset, an increase in asset, we debit. In a decrease, we shall credit. For liabilities, an increase, we credit, a decrease, we debit. For capital equity, an increase, we credit, a decrease, we debit. A revenue, an increase in revenue, we credit, and an increase in expense, we debit. So those are the basic double entry rules. Then you can also look at the regulation of accounting professions. We have objectives of International Accounting Standard Board, the IASB. One is to develop, in the public interest, a single set of high quality, understandable and enforceable global accounting standards that require high quality, transparent and comparable information in general purpose financial statements. Second, to provide the use and vigorous application to those standards. Then to work actively with the national accounting standards setters to bring about convergence of national accounting standards and IFRS to high quality solutions. You can also look at the role of the Institute of Certified Public Accountants of Kenya, ICPAK. One is to promote standards of professional competence and practice amongst members of the institute. It also promotes research into the subject of accountants and finance and related matters, and the publication of books, periodicals, journals, and articles in connection therewith. Also to promote the international recognition of the institute. Also to advise the examination board on matters relating to examination standards and policies. Also to advise the ministers on matters relating to financial accountability in all sectors of the economy. Also to carry out other functions prescribed for it under any of the other provisions of this act or any other written law, and to do anything incidental or conducive to the performance of any of the preceding functions. So those are the roles of ICPAK. What about the role of the KASNEB? For the Kenya Accountants and Secretaries National Examination Board, it prepares syllabus for accountants and secretaries examination. It makes rules in relation to the examinations. It also issues certificates to candidates who have satisfied the examination requirements. What about the role of registration of Accountants Board? This one registers the accountants that have been certified by the examination body to have fulfilled the examination requirements. Also issuance of practice certificates to those wishing to render the accounting services to the public. So those are among the roles of various bodies. So I'd like to continue in discussing our accounting concepts or the principles. So accounting concepts and principles are a set of broad conventions that have been devised to provide a basic framework for financial reportings. So we can start with the relevance. Information should be relevant to the decision-making needs of the users. Reliability. Information is reliable if a user can depend upon it to be materially accurate and faithfully represent the information that it purports to present. Then it is neutrality. Information contained in the financial statement attempting to present them in a favored light. Faithful representation. Information presented in the financial statement should faithfully represent the transaction and events that occur during the period. Then you have substance over form. Requires that if substance of transaction differ from its legal form, then such transaction should be accounted for in accordance with the substance and economic reality. You have the prudence concept. Preparation of financial statement requires the use of professional judgment in the adoption of accountants' policy and estimates. Completeness. Reliability of information contained in the financial system is achieved only if complete financial information is provided relevant to the business and financial decision-making needs of the users. Single economic entity concept, consolidation accounting. In the single economic entity concept suggests that companies associated with each other through the virtue of common control operate as a single economic unit, and therefore a consolidated financial statement of a group company should reflect the essence of such arrangement. On a consolidated financial statements of a group of account must be prepared as if the entire group constitute a single entity in order to avoid the misrepresentation of the scale of group activities. Then money measurement concept. In accounting, measurable concept means that only transactions and events that are capable of being measured in monetary terms are recognized in the financial statements. Then you have recognition criterion as defined by ASB and FASB require that the elements of financial statements such as assets, liabilities, income, and expense must only be recognized in the financial statement if its cost or value can be measured with sufficient reliability. Then we also have matching principle and concepts. Require that expense incurred by an organization must be charged to the income statement in the accounting period in which the revenue to which those expenses relate is earned. Then we also have timeliness principle. We refer to the need for accounting information to be presented to the users in time to fulfill their decision-making needs. Comparability or consistency principle. Financial statements of one accounting period must be comparable to another in order for the users to derive meaningful conclusions about the trends in the entity's financial performance and position over time. Under stability, transactions and events must be accounted for and presented in the financial statement in a manner that is easily understandable by a user who possesses a reasonable level of knowledge of business, economics activities, and accounting in general, provided that such a user is willing to study the information with reasonable diligence. Materiality concept. Information is material if its omission or misstatement could influence the economic decision of users taken on the basis of the financial statements. Then you have going concern. Financial statements are prepared assuming that a business entity will continue to operate in the foreseeable future without the need of intention on the part of management to liquidate the entity or to significantly curtail its operation activities. Accrue concepts require that income and expense must be recognized in the accounting periods to which they relate rather than on the cash basis. Before we move out from the going concern, what are the possible indications of going concern's problem? One can be deteriorating liquidity positions of a company not backed by sufficient financing arrangements. Another one is high financial risk arising, increased gearing level rendering the company vulnerable to delays in payment of interest and loans principal. We also have significant trading losses being incurred for several years. Then we also have aggressive growth strategy not backed by sufficient finance, which ultimately leads to overtrading. Also, increasing level of short-term borrowing and overdraft, not supported by increasing business. Also, inability of the company to maintain liquidity ratios are defined in the loans covenants. Also, serious litigation faced by a company which does not have the financial strength to pay the possible settlement. So, inability of a company to develop a new range of commercially successful products. Then bankruptcy of a major customer of the company. So those are the indications of a going concern problem. Let's continue the accounting concepts. You have the business entity concept. Financial accounting is based on the premises that the transaction and balance for business entity are to be accounted for separated from its owners. Realization concept or revenue recognition principle. Revenue is recognized by the seller when it is earned, irrespective of whether cash from the transaction has been received or not. Then we finally have the dual aspect concept or duality principle is the underlying basis for double entry accounting system. We can look at an example for a dual aspect principle. Let's look at this example. Mr. A, who owns and operates a bookstore, has identified the foreign transactions for the month of January that need to be accounted for in the monthly financial statements. He paid payment of salary to staff 2,000, sale of books for cash 5,000, sales of book on credit 15,000, receipts from credit customers 10,000, purchase of book for cash 20,000, utility expense unpaid 3,000. So under double entry system, the above transaction will be accounted for as follows. So you have to write in a solution, you look at the account title, you have to name the effect, either debit or credit. So for the payment of salary to staff, so that is a salary expense. So it will increase the expense. So we are going to debit. And also it's going to decrease the asset in the cash at bank. So it's credit. Then the sale of book for cash. It is going to increase in assets, which is 5,000 we debit, and also increase in income on the sale revenue. So we are going to credit that because it's a revenue. Then the sale of books on credit, so that is a receivables. So it's going to increase in our assets, we debit 15,000, and then it is also going to decrease in income on our sale revenue. So we credit the 15,000. Cash at bank, it is going to increase in asset, the 10,000, the receipts from the credit customer, as well as decrease in assets on the receivable. So we credit the 10,000. Purchase of books for cash will increase in expense, the debit 20,000, and also decrease in our asset in the cash at bank. So that is, we credit the 20,000. Then utility expense unpaid will increase the expense, we debit the 3,000, and also decrease in asset for the accrued expense. What are the importance of accounting standards or the accounting principles? One is comparability. Another important is that it becomes transparency. It is also relevance, as well as it is important to the audience. What are the limitations of accounting standards? Alternative solutions to certain accounting problems may each have arguments to recommend them. There may be a trend towards rigidity and away from flexibility in applying the accounting standards. Also, accounting standards cannot override the statutes. I want to talk about balance sheet or the statement of financial positions. So, I start with the format, then show you an illustration. So, for horizontal format, you have the title. You can name it as shown, name of the business, balance sheet as at 1st December 20 and the year. Then on the left side, you have the assets, and the right side, you have the capital and the liabilities. So, we derive this format from the accounting equation, where we know that assets equals to liabilities plus equity. Since accounting equation, which is also known as the basic accounting equation, it forms the foundation for all accounting system. In fact, the entire double entry accounting concept is based on the basic accounting equation. So before we go to the format, let's look at the assets. We know that assets are resources that are owned or controlled by the company to be used for future benefits. This can be tangible things or intangible things. So for the assets, we have the things like cash, account receivable, prepaid expense, vehicles, buildings, goodwill, copyrights, patents, all that. For liability, we know it is the amount of money owed to another person or organization. So here we have accounts payable, bank loans, lines of credit, personal loans, officer loans, unearned income, all that. For capital, we know it's a portion of company assets that shareholder or partners owns. Or we can talk about the remainder of assets once all the liabilities are paid off. The common equity accounts we have there: owner's capital, owner's withdrawals, revenues, expense, common stock, paid in capital. So all those are the different portions. So let's start with the horizontal formats. So we are going to look at the non-current assets. Here we have land and buildings, plant and machinery. You can also talk about features, furniture and fittings, can also talk about the motor vehicle. As you can see, there is an order. So non-current assets are listed in order of performance. So from land and buildings to motor vehicles. So this is the order of performance. Then you have the current assets. You have stocks, debtors, cash at bank, cash in hands. They can be many. So this is just a few. So you can also see here the current assets are listed in order of liquidity. Which asset is far from being converted into cash? For example, stocks is not yet to be sold or not yet to be realized. So when it is sold, we can either get cash or a debtor is sold on credit. When the debtor pays, then the debtor may pay by check, cash has to be bank, or cash in hand. Then on the right hand side, you have the capital. And then you have the non-current liabilities. This can be long-term loans. Then you have the current liabilities, overdraft, creditors. So these are listed in the order of payment, which is due for payment first. Like a bank overdraft is payable on demand by the bank, then by creditors. So the total capital and liability should be equal to total assets. In a vertical format, so everything is arranged on a vertical way. So you shall start with the non-current assets, land and buildings, plant and machinery, features, furniture and fittings, motor vehicles. So you have said this, they are listed in orders of performance. Then you have the current assets, stocks, debtors, cash at bank, cash in hands. So this one are listed on the order of liquidity. Then you have the capital and current liabilities, and also you have the current liabilities, which is listed in order of payment. So the total assets must be equal to the total capital and liabilities. Let's look at the instructions or the illustrations. Let's look at an illustration 1. Kamau has a business that has been trading for some time. You are given the following information as at 31st December 2014. So you have building 22,000, furniture, motor vehicles, stock, data, cash in bank and hand, creditors, capital, loan. So you are required to prepare a balance sheet as at 31st December 2014. So you are going to use, let's look at the vertical format as it is mostly recommended. So we start with the title. So we are going to start with the title, Kamau balance sheet as 31st December 2014. So you have to have the debit and credit side, or you can talk about the shillings since the amount are in shillings. So you start with the non-current assets. You have building, furniture and fittings, and the motor vehicle. So we add them together. We shall get a total of 44,600. Then you have the current assets. We shall study the order of liquidity, stock, debtors, cash at bank, cash in hand. So we also add them. So both non-current asset and current asset, after adding them together, we shall get the total assets of 76,600. Then you have capital injection of 61,600, non-current liability, you only have one loan for 10,000. Current liability, you only have creditors for 5,000. So when you add capital plus non-current liabilities plus current liabilities, we get a total of 76,600. So both assets and capital and liabilities, they are equal. Again, let's look at illustration 2. CPM has the foreign assets and liability as on 31st April 2012. So you have the creditors, equipment, motor vehicle, stock, data, cash at bank, cash in hand. During the first week of May 2012, CPM bought extra equipment on credit for 5,520. Also bought extra stock by check for 2,290. Paid creditors by check for 3,160. Also debtor paid sharing 3,360 by check and 240 by cash. And also he put an extra 1,000 cash as capital. So what you are required to determine the capital as at 1st May 2012. Also draw a balance sheet after the above transaction have been completed. So we start with determining the capital. We know that asset equals liability plus capital. So capital is equals to asset minus liability. So we are going to put all assets together and liabilities. So for assets, equipment, motor vehicle, stock, debtor, cash at bank, and cash in hand all add up to 148,120. And for liabilities, we have the only creditors, which is 15,800. So when you subtract both, we get a capital of 132,320. So that is our capital. So before we draw up the balance sheet, we need to do some adjustment. We are told that he bought extra equipment on credit for 5,520. So we shall consider the effect of the above transaction on the relevant balances. So buying an extra equipment means that the equipment balance will increase by 5,520 and the creditors will also increase by the same amount since the equipment was bought on credit. Also, buying extra stock by check means that the level of stock goes up by 2,280 and the balance at bank reduces by the same. Then paying creditors by check reduces the balance on the creditors account and also reduces the amount at the bank. So debtor paying the firm reduces the debtor balance by 3,600 and increases the cash at bank and cash in hand by 3,360 and 240 respectively. Then additional cash for 1,000 increases the cash in hand balance by 1,000 and the capital balances. So if we can look at that, the summary will be you have the assets, stock, liabilities. So the summary, you have assets and liability and their opening balance. Then you have the adjustment, increase or decrease, and the closing balance. So for the equipment, the opening balance of 46 increased by 5520, it will be as such. So we have motor vehicle the same, the stock, the debtors, cash at bank, cash in hand, creditors, and capital. So these are the adjustment and their closing balance. So therefore, the balance sheet will have this, the title, CPM balance sheet as at 1st May 2012. We have the non-current assets. We have two equipment and the motor vehicle. The current assets, we only have stock, data, cash at bank, and cash in hand. Then you have the capital. And the current liability, the creditors. So the amount I'm taking here are the closing balances for each. So the asset shall be equal to capital plus the liabilities, which is equals to 151,480. So thank you for watching. Please like, comment, and subscribe.